This video and all other videos on this channel are for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all. Alright, hello and welcome to Camel Finance. I'm your boy Camel and welcome to the week. Welcome to Monday. If you are interested in increasing the accuracy of your timing, then study the cycle work that is available on this channel. There is a PDF you can download, there's a free tutorial in the tutorial playlist, and there is an entire website devoted to making cycle trading available to everyone, including an indicator that will pick all of the lows for you. So what is your excuse? How come you are not taking this edge and applying it to your trading to better your overall returns? Myself and people like Cred here are thinking that we're actually closer to a bottom than most people seem to want to entertain. He's thinking that the bottom is close across the board, most likely, and I tend to agree with this. I think in the worst case scenario, we can run with this alternate count idea, which Surf City has here, and I think so does Bob Lucas, right? They're calling this a day 76 cycle low, followed by a day 40 something cycle low, I think 41, 42, and thus we got a day 11 left translation and failure here, heading down to a cycle low in the next couple of weeks, let's say about 3 weeks time, and then it should be apparently time to bottom here, okay? And I think that's in the worst case scenario. I actually still favour my own count, which is this one here, okay? I submit to you that we don't actually need a shorter 42-day count here to equilibrate the longer count because we had a shorter count here. So we went shorter count, longer count. Now everything is right with the world. Sometime in the next couple of sessions, I expect to see a trendline break confirming this is really the low. And that's all we need, right? A trendline break, a true cross on the DSS Brexit, the camel indicator to pick the low, and of course a nice big candle to push us a daily close above this blue 10 simple moving average here. And that's it, okay? We've got a new cycle here inside the timing window. Well, okay, a few days after the timing window, but that's good enough for me, right? That is good enough for me. All we need now is a trendline break and a bit of a push, and I think it's happy days, okay? And again, in the worst case scenario, it's probably the exact same outcome, just from slightly lower down and in a couple of weeks' time. But I actually favor my count at the moment. With that said, the sentiment is actually getting extremely bearish here, which makes me think the sentiment matches more for a weekly cycle low reset than it does for a daily cycle low. But the reality is, okay, there are certain types of traders that are incapable of sitting back and letting price action develop, okay? They want answers now. They want to jump up and down and throw their toys out of the pram and act like the market owes them something, right? They want to behave like entitled children, when in reality, okay, we can choose to be professional about this. We can sit back and say the market owes us nothing. This is a financial market. I'm just going to sit back and let the candles paint themselves on the chart. And as that happens in the next few days, okay, we will find ourselves back in a situation where the read on the market is clear. So I'm going to put my feet up, let this price action do what it's going to do. And in a few days' time, we're going to know for sure, right? Because we're either going to be significantly higher here, confirming my count is correct, or we're going to continue to chop and bleed to the downside. And then, of course, we can accept this one. But either way, all paths point to a tradable low before higher prices walking forward. I'm kind of on the same side as Andrew here. He says he doesn't see anything wrong here, to be honest. This is gold on the left, big ABC correction, huge 65% upside move. And here's a very similar setup from Bitcoin. ABC, cycle low, 65% move would put us north of 200K. And again, a lot of people seem to be saying this is ludicrous, this is impossible, but really, I don't think it is, to be completely honest with you. And if you don't believe me, well, perhaps Rao can supply your hopium for the day. Because crypto is still being adopted at twice the speed of the internet, from 5 million IP addresses versus 5 million wallets, which he says is very like for like, en route for 4 billion users by 2030. About half of the entire world should be using crypto by 2030. That's not that far away now if you really think about it. And that would take this asset class from around 4 trillion in market cap to $100 trillion by around 2032 to 2034. So whilst many have drawn the false conclusion that we need to chase altcoins and shiny projects in order to get the returns required to free ourselves from the matrix, those of us that understand the unit bias effect understand that there is still an enormous amount of upside left on the table here for Bitcoin if these numbers are even close to true. 100 trillion market cap by around 2034 at the latest. You know, just knock a few zeros off of this and think about it in terms of retail and normie investor logic, right? Would you not like to buy a meme coin at 4 million market cap only to see it reach 100 million market cap? Of course you would, right? So why then do you discriminate against Bitcoin moving from 4 trillion to 100 trillion? Remember, all this is going to be driven by two secular trends: adoption and debasement. Debasement explains 90% of the price action, and adoption explains 100% of outperformance versus the debasement. In black here, we've got the GMI Total Liquidity Index, and in pink here, we've got Bitcoin. And as Raoul points out here, yes, that is an R squared of 90%, as you can see right here. So in this instance, correlation is indeed causation. And if all you care about is if September is going to be weak, right? Or is September a seasonally weak month for Bitcoin? Then you really can't be saved from yourself. This right here is the comparison to 2017. So in black here, we've got April 2017 to January 2018. And in pink, we've got Bitcoin today. Now, what do you notice? This is actually tracking remarkably similar. It also speaks to finding a major cyclical bottom here. Perhaps even an early weekly cycle, some kind of weird inversion. At the very least, a daily cycle low, as my count is currently favoring, and setting us up for a run into the end of the year, topping sometime around the end of this year, perhaps in December, at approximately 220 to 230k, which again fits the things like the power law, fits things like a final weekly cycle, fits that blow off top structure, that third and final blow off top angle that's missing. We can see the crypto miners are starting to blast off here, perhaps leading higher, just like the precious metal miners have been leading the precious metals higher. Really, if what happens next is this, no one that has been watching this channel will be able to say we couldn't have seen that coming, right? We've literally been cheering this thing on, pointing at data that supports this idea the entire time. And frankly, it would actually be kind of weird if the top is already in and this thing's just going to roll over from here, at least from my perspective. Now, as ever, I am open to everything, okay? We start to actually see rollover and breakdowns and that kind of thing, fine. But what I'm observing right now is a whole heap of people dumping their entire stack, and those people that are dumping their entire stack don't have the best track records. So again, maybe, just maybe, okay, it's me that is behind the curve here. Maybe it's me that needs to be dumping my Bitcoin. But as of right now, I remain cautiously optimistic that there is another leg higher. I still think we're missing that final leg to the upside. And until something changes in the chart, then I continue to stand with this bias and posture. So in the meantime, as Raul says, okay, just sit in the waiting room, hodl, touch grass, and it will all play out with or without your endless fretting. As I said right at the start, okay, some people like to throw their toys out the pram and act like the market owes them something. It in fact does not owe you anything. This is a financial market. Sometimes the best course of action is to put your feet up on the desk, sit back, and let the chart reveal itself. I left this here as a little nod to myself to talk about the precious metals before then looping back around to Bitcoin and the stock market. Silver is on a 40 handle the last time I checked this morning. I'm sure it probably still is, which means I think it is finally time to get that historic move above that $50 level. This big parabolic blow off top is in session now. We've been talking about this for a long, long time. I'm actually going to dump my physical silver above $50. I'm going to unwind a whole heap of the mining positions in the member section that we've had for a while. And I'm expecting this thing to have this huge violent blow off top moment in the silver market before then coming tumbling back down, and then we'll buy it all back down there in the 4-year cycle lows. So let's kick things off with silver, which is now celebrating a 40 handle at the hard right edge, okay? Makes a lot of sense, pushed up into that timing window to get one final quick daily cycle low perhaps to hop on, and then it should be blasting off, right? We've been talking about this for ages and ages and ages. Time to get that push above $50 now. Anywhere between 50 and 60 will be pretty handsome. Then we'll start to unwind this position. As I said, we are leveraged to the gills on this whilst maintaining risk management, okay, and playing the higher beta assets such as SilJ to catch this move. And I think this has got a lot higher to go for sure. And again, not only are we aiming in this timing window here to offload the position into the top of this weekly cycle, just as the masses are about to flip super duper uber bullish on the precious metals here, but again, I point at these miners leading higher, okay, moving to the upside, letting us know ahead of time what was coming for the underlying gold and silver market, which is now no longer conjecture or speculation, is it? This is now absolutely confirmed. Okay, the miners really were leading higher. The spot markets are now going with them. You can see gold also now pushing up. Okay, all of this makes a lot of sense. Enter the timing window, quick pullback, and then it's blast off time. The yellow fractal of mine, whilst it took a little bit longer, okay, fractals are never one-to-one as we know, is still very much in play, right? It's just that we are somewhere in this kind of neighborhood now, I believe. And then, like I said, it's going to be time to dump here as the masses flip to, this is a new bull market, this is for real, time to get fully exposed, okay, 10, 15, 20k an ounce targets are going to come out, but no, then we have to wreck all of the latecomers into that 4-year cycle low, and out of that 4-year cycle low we can go again, okay, but remember the risk is still deflation, okay, how are the precious metals going to fare in deflation? Not well, I suggest to you, a minimum of 30% decline coming for gold once it's topped. So once again, right, a little bit of patience. I think we've demonstrated this time and time again on this channel, but this was a good example. In here there were many top callers. In
can hear there are many people saying no way gold's got another leg and all of that kind of thing. Okay, they're clearly wrong because they didn't have any patience and they were guessing before the market had revealed its true direction. So all is right with the world in the precious metal region. Okay, here is what I'm suggesting to you is the final fifth wave before a whopping great correction comes later in life. The stock market is closed today, but we know when it opens tomorrow, it should be heading for a daily cycle low because we're now in that timing window to start to see a decline and get another position on there. So no changes there. Happy days so far. And of course, Bitcoin. Okay, Bitcoin, I still suggest to you, we can treat exactly the same as the precious metals. Okay, we can sit back, not make any premature judgments, not act like the market owes us something here. I still see a lot of this kind of, oh, this is so boring, right? Or like, oh, I just can't wait to exit this market, right? Like the market owes you nothing. Okay, and I think a lot of people would do well to realize that. So I'm going to sit here, let the market do what it's got to do. Okay, if this count is correct, and I believe it is for now, then we should get a nice big push in the next few days. And if it's wrong, then we can target the weekly cycle low and look to play the final leg from there. But again, I continue to point at things like Riot, for example, pushing higher and higher by the day. Why is it doing this? I believe it's because the institutions are bidding this thing up because they know Bitcoin is about to break out, just how they were pushing up these mining ETFs because they knew gold and silver were about to break out and burst into their final fifth wave. That is what I believe is coming. I'm also seeing a lot of BS narrative out there. People are looking at things like Wolf and IREN, okay, which again are leading, and the cycles predicted this would happen a long time ago, as the level 3 members will attest. But I'm seeing a lot of people come out and say, well, this isn't happening because of Bitcoin. This is happening because they've pivoted to AI or whatever. But remember, this is BS. We don't treat other cycles that way, right? We say cycles are in control, everything else is narrative. So why now are we suddenly going to start to try to blame cyclical behavior on things like a pivot to AI, right? It just doesn't make sense. That is the narrative that is appended to this current cycle. But we know that's all BS because we were able to call this move months in advance, okay? I had no idea about the AI thing. I wouldn't to this day know about the AI pivots if people hadn't told me about it. But I did know the cycles were pointing up, and I did know that these are likely going to lead Bitcoin higher, and so far they are. Okay, so I think we can stand here and say happy days, long and strong, keep watching the sentiment sour, keep watching people jeet the bags, and as ever, we'll keep taking this thing one day at a time. I'm your boy Camel, welcome to the week, welcome to Monday, and until next time, all the best from me. Cheers, bye.
Camel Finance, he's the man to see. Rocking the markets with his contrarian spree. Trades like a pro, no fear, no shame. Sticking to his guns in his money game. He's a badass, oh yes indeed. Camel